S Naren, ED and CIO at ICICI Prudential AMC, currently in conversation with Nikunj. Nikunj, take it away.
The question is this risk, is this volatility? Now, it's not for the first time markets have fallen like this. If one looks at the last 20 years of data, concentrated sell-offs have happened in the past. But what I want to discuss with Mr. Contrarian on the show today, which is S Naren, is that when markets fall like this, should one start praying and remembering their favorite god, or it is time now to put money to work? What are the chances that if you buy now, you may not end up buying a falling knife, you may actually buying value, and this could be a great entry point when a shakeout has actually happened both locally and globally. Naren, fantastic to have you back. Thank you for joining us. You love these days, don't you?
Yeah.
They give you buying opportunity to buy.
I loved Friday more.
Were you buyer last week? Were you buyer last Friday?
See, actually, we've created a set of products like Balanced Advantage Fund, which, basically makes use of these opportunities to buy. And, we inherently believe that markets will be volatile and will give you such opportunities. And the beauty has been that, in the last let's say 45 days, both on the last day of the month in January, on the February 1st and on February 28th, we got superb opportunities to buy. And in both the days, markets actually came so fast that you got a superb opportunity to buy. And these kind of opportunities, when there is panic and you have the ability to buy, gives you a very interesting situation.
Naren, it is said that markets always preempt the future. It is collective wisdom, and markets will tell you what is going to happen next. The fall what we've seen last week, at least in global markets, is reminiscent of the price action we've seen in 2008. This is not 2008. This is not a problem where a system is going to collapse, but yet the selling has been very concentrated and very excruciating. What does the pattern tell you?
Actually, no. The fact is, you go and look at the chart of many of the global stock indices. Let's take the Nasdaq index. The Nasdaq index has been moving up parabolic moves. When you have parabolic moves upward, you have to have a reason for a correction. When you see that correction, actually you'll realize that there was need for a correction. What that correction reason is, you will realize it later. You will not know it on that day. And what we always say is, triggers are found later. We will realize that the trigger is coronavirus. But no one would know what is the reason. But if you look at any of the global large cap tech stocks, you'll find that they've gone up parabolic moves. So why can't there be a correction? And if markets were to just go up, and actually, if you look at the lead reason for the markets going up, if you look at it, you have taken interest rates to zero. You have made the cost of holding equity zero. When you make the cost of holding equity zero, it doesn't make equity becomes riskless. So these periodic corrections are needed to prove that there is something required called an equity risk premium. And that is what has been proved at this point of time over the last 2 weeks.
There is a thought in the market, Naren, which is that in 2008, central bankers came together, they cut interest rates down. Guess what? For anyone to cut rates now, the scope is not there. US bond yield is at 1%. In Japan, negative interest rates have been there for years now. Europe also, where interest rates are. So if there is a problem of growth in the world, what is the ammunition left in anybody's armory to fix the problem?
See, while that is true of most countries, US can cut interest rates by 1%, India can cut interest rates by more than 5%. So I would say US and India are in a much better position than most of the countries in the world. So I would say that from that point of view, I would say that India and US are in a much better position. Clearly that is true, but if you look at a country like Germany, it's fiscally balanced. So frankly, if one day German parliament wakes up and says we have to do fiscal stimulus, they can actually increase their fiscal deficit. So there is possibility of fiscal stimulus in Germany. There is possibility of rates to be cut significantly in India. These are the things which can happen pretty easily at this point of time.
So the question, Naren, will just come up on the screen as we walk and as we talk, which is that, is this risk, is this volatility?
I would call it volatility, and volatility when valuations are high is part of the game. And if people think that there won't be volatility in equity markets, they have to be periodically told that volatility is there. If volatility never comes, like 2017, people think, why should I invest in debt? Why should I invest in large cap? Let's choose only small cap. I think these periodic bouts of volatility are necessary for people to actually feel that they should be actually having an asset allocation approach to investing and not just investing only in equity. So I think it's a good wake-up call for people, and it actually makes the market more sensible, investors more sensible, fund managers more sensible, issuers more sensible, everybody becomes more sensible.
Okay, now let's talk about your investment style. You love bad news because bad news gives you better value. Where do you think markets currently have overshot themselves and the underlying asset pricing either is cheap or the underlying business is not that bad?
I think value was cheap ahead of the correction, but value has corrected as much as other stocks. So I find it, in my investing career, I saw stocks on dividend yield cheap in 2001-2. And after that, for a 6-month period after Lehman, I again see a number of stocks very cheap on dividend yield. When stocks are very cheap on dividend yield, it gives me the ability to buy and hold. If dividend yield in a country like India is equal to, let's say, liquid fund returns, it gives me the chance to buy that stock and sit on it for the next 3 years, because I feel that I can hold on to the stock. Because in addition to dividend yield, at some point of time I should get capital appreciation, and that becomes a big advantage. So I think there is deep value today in a number of stocks. And what I find amazing, they are available in a number of large cap stocks as well. And that has become a big advantage for me. It is there in many of the PSUs, it's there in many of the oil stocks, it's there in many of the metal stocks. It is there in a wide number of stocks at this point of time.
Is dividend investing or good old value investing debt? The reason why I'm saying this is because that theorem of value investing, where you buy cheap, hold, focus on the underlying asset price, look at the enterprise value. Last 10 years, these theorems have not made money. Are you getting old now to understand the new world?
And this is a question I'm being asked periodically. In 1999,
Let me ask you again.
In 1999, Warren Buffett was asked this question. So I read the recent annual report of Berkshire Hathaway's statement. He has underperformed the benchmark in 2019. And his statement, in 1999 he was written off. 2019 he has underperformed benchmark meaningfully. So after that, Warren Buffett is also being asked this question. So he comes back from the grave always and shows that value investing works. I don't think...
But Naren, that's largely because interest rates always go up and down, and then it changes the way you price the asset. But in this case, interest rates have been permanently down and they may remain low for long. So how does one invest in this kind of an environment?
But if dividend yield is much higher than interest rates, why can't dividend yield compensate for the low interest rates? Doesn't mean that you can have markets just going up sky high. It can't happen. That's my view. And that is the way, if you look at it, it has not proved right that over the last 20, 30 years, there was a period between 96 and 99 where people pronounced value investing dead. But value investing came from the grave between 99 and 2007. Again, in the last 3-4 years, I was reading one prominent fund house which said it was again a tough time for value investors. But they come back, because at the end of the day, it is a style which has proved its existence for the last 50, 60 years. So I don't think it will go out of fashion. I think it will come back always, because it is logic. When it works in buying vegetables, it works in buying cars. Why won't it work in buying stocks also over the long term?
So can I say S Naren feels that it's time to buy PSU stocks? S Naren feels it's time to buy oil PSU stocks, it's time to buy utilities?
Time to buy metal stocks, time to buy dividend yield stocks, time to buy metal stocks, time to buy anything where the intrinsic value looks this thing. The same thing worked. 1 year back, people used to ask me, will telecom ever deliver? And people used to ask us whether corporate banks will ever deliver. But today the question on telecom and corporate banks have ceased to exist because they have delivered. So once something delivers, people stop asking that question. Once it doesn't deliver, people ask you this question. It's part of the job. When you're managing other people's money, you have to be willing to answer these questions, because you are handling other people's money. And the problem is, we don't control the markets. We only control the philosophy and the process. And I believe that the long-term investors today in value funds today are going to have a phenomenal time, is my personal belief.
Fair point. I mean, of course, you have a view and you've been candid about it, and that's what I always appreciated about you. Okay, Naren, your lucky charm in last 2 years has been telecom. You started buying telecom stocks in 2018. You held on to your conviction. 2019 is where you've made money. When you bought telecom stocks, your theory, what my understanding is that you thought that rates will not remain that low and eventually industry will come back in terms of coming to reasonable pricing. But when you invested in telecom stocks, I'm sure the AGR issue was not on the horizon.
Yes.
So how would you view telecom stocks considering that there is an AGR issue on the horizon?
I think it has made the outlook for the top two stocks more beneficial. I would hope to still see a three-player market because I think a country like India requires a three-player market. But I would say that if you have a two-player market, the outlook for the two players becomes superior to that of a three-player market. But I think the outlook depends, finally it depends on how important the mobile phone is for you. Today, if you look at what has happened after coronavirus, travel is completely suspended, but events still go on. Everything happens now on video conference. If you look at what is happening in equity research, every global house today does video conferences equivalent to research visits. And every day I get mail saying that these are the 5 video conferences we are organizing. What does it mean? More revenue for telecom and lesser revenue for all the other industries.
No, but I would insist you come to our studio every time. So at least let's be very sure that what our demand or our request from you always has been. It's much more interactive. That's what I always feel. I'm going to switch gears and talk about something where you've invested in the past. You took a big bet on Tata Group of names when Chandra took over. How would you view things and how are they moving for the Tata Group? SEBI's restriction is on stocks, not on groups.
See, finally at the end of the day, a group depends on the sectors, and that's why it's difficult to classify it on the basis of a group. I would say that there have been challenges on anything to do with infrastructure, and I believe that if I look at it, I have a principle. If for 10, 12 years an industry does badly, you bet on all the companies in that industry which you think will survive.
So just say that again, if
an industry does badly for 10, 12 years, okay, you bet on all the companies which you think will survive. That was my goal in telecom also. Okay. Today, notwithstanding ESG, my belief is that if you are dependent on power, you bet on renewable power. How many people are there in renewable power today? Can you live without power? Can you live without telecom? You can't live without power and telecom. So I believe that you have to bet on all the people whom you think will survive in power industry. Are there, how many people are surviving in the power industry? Less than 1/5 of the number of people who existed in 2007. Is the outlook for that 1/5 much better than what it was? Certainly, because power demand keeps going up. In the next 10 years, 20 years, will power demand go up? It will go up. So I'm a big believer that in any sector, you have to bet on the survivors. And that is proved even in corporate banking. It's proved in telecom. It will prove itself in power. Can there be ESG problems in coal power? It can be. But is renewable power, how many people are in renewable power? Who all are in renewable power? Look at it from that angle. So I would say you have to go across each specific company. If a company has good corporate governance, group has good corporate governance, they will choose not to move money from one place to another. So which means you can have companies doing well, you can have companies not doing well. And that's part of the job. So our job is to choose the sectors doing well. Finally, at the end of the day, we have to choose sectors not doing well and hope for it to do well. And that's how we try to make money.
What are the lessons for an investor to be learned when you see a stock like D-Mart, which was expensive, go from the listing price, not the IPO price, the listing day price of 600 to 2,500?
I think the final answer will be in 2025.
Okay.
The answer will not be in 2020 because finally our belief is what we saw from even credit risk funds. See, it is not in 2017 without credit risk playing out that you analyzed who won or who lost. We have not seen an equity cycle go away yet. The cycle which started in 2014 is continuing in 2020. The equity market, bull market, which started in 2012 in US is continuing in 2020. So I believe the time to look at investing is after a cycle is over. And I believe that that's why I would say the best time to evaluate any company is when you look at it over a cycle. Because in a part of the cycle, when there is a bull market, particularly financial services, if you look at it, if you look at one part of the cycle, you will think that someone is the winner. Once the credit cycle turns up, someone else becomes the winner. And that's what we have seen in different parts of different industries.
Naren, we don't know where and how the next bull market is coming. We don't know which stock could be in a bull market or a bear market. That's price action. What I guess fund managers try to analyze is where there could be an earnings uptick and where there could be a cyclical upturn. It could be market share gain, it could be industry disruption. Where do you think, what are the 2 or 3 trends according to you are going to be the powerful trends for from 2020 to 2025 on earnings, on market share gain, or even on disruption?
I think people seem to think that all that is required is the quality ends of the spectrum. And people seem to think that people can do with only quality stocks. I believe that in 2007, people believed that you had to have only the infra-oriented stocks. I don't think that's possible. What happens is, in any industry, if only one set of companies enter, in infra, for example, in 2007, you had 25 road companies entering. You had 25 companies entering power sector. Today, for example, no one is entering telecom, no one is entering power, no one is entering different industries. So what happens, the number of players in every industry keeps going down. When the number of industry players go down, the margins for the players increase. So I believe we have to bet on the industries which have done too badly for 12 years. And for me, it's a very good situation that if there are sectors which have done very badly or big themes which have done badly for 10, 12 years, and you're not going to have a country which can only do well with only one theme playing out. It can't happen. A big country cannot play with just one theme. We are not a nation state. A nation state like Hong Kong and Singapore can have one theme just playing out. We can't do it. We are a big country. So I believe we bet on themes which have not played out for 10, 12 years and bet on that theme. That's how we look at it.
Every time when we look at the last 10 years and then we in a sense look at the future 10 years, there are businesses which are relevant and there are businesses which may not be relevant. In today's disruptive world, when we're using words like artificial intelligence, how 3D printing and 3D manufacturing is changing the way how we would be consuming, which other business do you think will not be relevant? I mean, ultimately we have to figure out whether the importance of that business or the need of that business will be there in the society or not. And the reason why I'm asking you this is that you gave me a wonderful example in 2017 when we met at the Morningstar conference and you said, look, this is my phone and I'm spending 3 hours with this phone, 3 hours on my phone every day. So the relevance of telecom services will not go away. Apart from telecom, which are the businesses which you think will lose relevance or or relevance will increase further?
Something that we have to keep thinking about. I mean, how you and I live each day and how we act. Like if you look at it, the reality is that when I see the younger generation, I am dependent on reading Economic Times in the morning and Times of India in the morning. But look at the younger generation, they want to read it on their app. So that's how the younger generation wants to read everything on an app. Whereas I want to read that print copy every day in the morning. So that's a change in trend. So I believe like that there are many things that, which the younger generation likes to do on their phone, what the older generation likes to do physically. So like I'm used to doing everything on my mobile application on the bank. But my mother-in-law doesn't like to touch. She believes that if she uses our mobile application, her money in her bank account will disappear. So that is why she doesn't touch the mobile application. So I think we have to look at how all of us change, how we have changed our lives over a period of time. Can we live, how we change, how we have changed. Everything. Can I go to the theater and book a ticket? No, it's not possible today. We have to book at our homes and then go to the theater.